Welcome to the Mango Grove, everybody. My name is Krisha and...
My name is Sean Dexter.
And this is today's Bitcoin and the big fat elephant in the room, oil analysis video.
So we're doing a special today?
Yes, it's going to be a special today given the recent, disaster on oil, right?
Disaster.
I think
that's an understatement. It's historic. That's what it is. Historic.
We were actually watching that move, guys. We watched it move from $10 all the way down to...
No, we were watching it all day from 14.
Oh, that's right,
13,
that's right.
11, suddenly it was 9, 8, 7. Then we were supposed to go to bed and we checked the price on our phone. I'm like, Krisha, it's at $4. $3.
It was insane. It was insane.
$2.40.
So what was the final price?
Negative 35 and 60 cents.
And that's why we are going to be talking about oil and what really freaking caused that. But before that, let's first start off with Bitcoin, okay? So now the question is, Bitcoin is being a little finicky here. I feel like it's being on the fence. However, I don't know. I'm still leaning bearish, right? What about you, Sean?
Yeah, I'm bearish. I think everybody knows I've been bearish for a while, and there's literally a line on the chart in the sand from where I turn bearish and bullish. It's so simple. It's so simple, right? Like I'm not letting any of the fundamentals dictate whether I go bullish or bearish on Bitcoin, and that makes life easy. It makes life stress-free. Right?
So you're just following the technicals right now?
Yeah, just it makes it easier, right?
And look at this. Notice how the Mango dashboard is actually calling a neutral, but this changed a day ago.
Yes.
So now the question really is, do we turn long from here or do we turn short,
we
right?
turn short. We do. It's going to happen. The dashboard does what I tell it to.
By the way, for those of you who have asked me about access to the dashboard, there will be a free version as well as a premium version, okay, of the dashboard. Now, for those of you who are basically trading as a hobby, I don't think, you really need the premium version. I think, the free is decent. However, if you are looking to, get an extra edge, take it seriously. There is a premium version, okay, for which I have, now this is not, we haven't released yet, okay, we're still working on it. I think the release we'll be releasing soon. This week. So for those of you who want that extra edge, I have included a sign up form, okay, on the Mango Research website. This is it. I'll be including it in the link below.
It's mangoresearch.co/get-dashboard. So mangoresearch.co/get, then that dashy sign, dashboard.
Okay, but even if you don't remember it, I'll be including a link in the description below. Okay, so like I said, for those of you who want that premium version, who want that extra edge on their trend trades, this is it. And so you can kind of just scroll through the information. There's a whole bunch of information here on the dashboard and what you get. But I think the main thing over here is to just know that this is going to keep evolving, okay? We'll be including new features on the dashboard. But for those of you who do sign up,
we already have a few features that are going to be added very, very soon. We are just testing those at the moment. So keep that in mind as well. And whoever does sign up for the early bird discount, you lock in that price forever. So you don't have to pay any additional fees or anything like that when things start getting added. Yeah. Right? It's kind of like the seed program. If you do remember, the seed.
So we had the early bird access.
It was going for half the price that it is going for right now. But as we started adding more and more and more modules, the price went up. But the people who got in early, they get to enjoy all the modules moving forward. Right, so it's kind of like that.
So it's going to be the same thing here. So this is the sign up form, okay, and for the first 50 signups get a sweet discount too. So everything is going to be included here. Link in the description. You want more information in the description. Sweet. Okay,
let's talk about Bitcoin now. Enough.
Bitcoin. All right.
Yes. By the way, this was exactly what we were talking about in yesterday's video. If you guys missed yesterday's video, please go ahead and watch it.
That's right, guys. Please go ahead and watch yesterday's video. He actually did a very, very good job on the TA. So you did take a trade actually yesterday, right? There was a short position that you took.
Yes.
So where did you take that?
Well, remember that head and shoulders that even you posted on the Grove? I think I'm not sure if you posted on the Seed or on the Grove chat, but it was.
I think I posted on.
There was
the
a distribution going on right on the top of that. It was so obvious.
This was it. This was it. Okay.
Yeah. So we broke down. There you go. This is my
He's
chart.
got his lines.
Yeah. So basically, I shot the retest right away.
So this right here.
Yep. So there was a gift. There was a freaking gift. And right after, look at that. It's just like right after you were rewarded for it, right?
So have we met the measured move though yet?
The measured move is a trend trade. I'm not looking to.
Okay.
So.
So now for those of you who are looking, so this pretty much met the measured move actually. So that's pretty cool. But it's a trend trade. Coming back to the trend. So if you actually go onto the daily, now this is what I have spotted. I'm spotting a couple of things here. I'm just gonna get rid of this line. Is that okay?
Yeah.
Sean's chart. We use 2 different accounts, so I gotta be careful, right? Deleting those lines and get rid of this. Okay, so I mean, gun to your head, you think this is bearish, right?
So if you guys do remember from yesterday's video, I proposed 3 scenarios, right? Now, like I said, I'm not here to spoon feed you guys how to trade. I'll teach you guys how to understand the fundamental concepts, and we had an if this then that scenario, and you always have to pick the probability of where you think price is going to go. I was leaning bearish because we were against some major resistance on the higher time frames, right?
Yeah.
Monthly, weekly, 3-day, 4-day. We've been going over this for more than a week now, right? And we've just been very patient, bidding our time. We've taken trades off these levels multiple times now, and we've taken profits at around 6,500 a couple of times, and we've seen bounces of that region. This time, however, because now we have a chance to put in a lower high, well, not a chance. Yesterday we had a chance to put in a lower high. Today that lower high is confirmed. And we've been talking about this for a while now. Does Bitcoin confirm this as low high? We've done that. Now do we get that lower low? Okay. Once we do that, the downtrend is on. Okay. So remember what we said yesterday, guys. Bitcoin broke its uptrend, but it hadn't started a downtrend just yet. And in fact, it had a chance of continuing the uptrend or redeeming itself. It now confirmed its lower high. Right now, if we put in a lower low as well, and if you guys are on the C program, you guys understand exactly what we're looking for and the technicalities between all of this, blah blah blah. Sounds complicated, but it's easy when broken down. You've watched the trend analysis module as well, right? You see how it all cascades. So I was gunning for that lower high. As soon as we start seeing distribution on the lower time frame, right, the head and shoulders we just showed you, right, I was like, okay, cool, this is my chance to be able to get that lower high play, right? And I took the trade because it was looking so obvious when we broke it and then retested, right? Again, very similar to what we've been doing with ChainLink and our previous trades, gold too. They all kind of have been doing that, right? Putting in these toppy formations, breaking down, giving you the perfect retest.
Right. So right now, like, I feel like it's quite apparent that the general sort of market is sort of leaning bearish, right? And this was a brilliant freaking trade on your end. But getting back to that daily time frame, so I feel like, so you were talking about, the overall trend and actually putting in, so we have a lower high that's been confirmed. Now question is, do we put in a lower low?
Yeah.
Right? And now this is something that I spotted. I think there is a bearish head and shoulders at play here. I do believe it has the right sort of volume profile to it, but tell me if you see it. He's smiling. He's like, this girl just cannot help herself. She's seeing patterns everywhere.
No. They will know why I'm smiling, because it was two videos ago where I drew this as a head and shoulders, right? We came up to the conclusion as a head and shoulders, and we're like, this is the psychology, by the way, guys, of a head and shoulders. I was explaining something else to you guys, and we drew this out, right? And we said, this is the psychology of a head and shoulders. Do I know that for sure? No, but maybe we'll ask Krisha and she can confirm that for us. And there we go. She just confirmed that for us. I never asked her. And I didn't ask her because you guys know why, right? I don't really care whether it's a head and shoulders or not. I play it the same way, and there you go. I'm playing it as a trend trade, and that's what a head and shoulders is. It's a break off an uptrend or whatever, right? That's why they call it a reversal pattern, guys, because it breaks the trend of the direction it's in and goes in the other direction, right?
But now you mentioned something that's key. It breaks the trend.
Yeah.
Right? So before the break, the trend, well, is not broken, and the formation does not come to play until the break takes place.
So you're seeing how it all lines up. If we break this head and shoulders, it's also going to confirm that lower low at the same time, right? That's how it all cascades. So now you're going to have people saying, this is not a head and shoulders, while other people are saying it is a head and shoulders. You know what you guys tell them? We don't care. It doesn't matter. Because like we said in that video that I was just talking about 2 videos ago, when you put on your trade, you're not telling BitMEX, hey, I am going short because it is a head and shoulders, and because of that, I think I should get a profit, right? No, BitMEX doesn't care what pattern you think it is. All BitMEX cares is whether you are right or wrong on your trade, or whether it wants to take your money or give you money. That's all right? So all that matters is up or down, and you putting the trade in that direction. Simple, right? Just don't get into those arguments with people.
Yeah.
She's smiling at me. Pattern queen right over here.
Yeah, I mean, but right now, guys, I feel like personally, I think this is looking sort of droopy, and I think the impetus to actually us. What do you think would be the impetus to us actually coming all the way down to, well, the 5K region? A lot of people are gunning for that right now.
5K?
Yeah.
Are people gunning for that? I don't know. I think
appears crypto Twitter seems to have like influence on their targets.
Then we're likely going to 3K, to be honest.
Yeah.
If we are not going up and we are going down, and that matches with everybody's down direction, then the only thing people can be wrong on then is where we stop, right? And we're likely going to keep going. So on that note, actually, we can start talking about oil, because yesterday I was getting a lot of PMs from people saying, hey, Sean, should I buy oil? Right? It's so low. I'm seeing this crash and it looks so good. We have the tab open right there. Right? It looks so good. And by good, it means like it's crashing. It's so cheap, right? And my response to everyone was, it can go lower. It can go to 0. And between, even if you buy at freaking $1, if it goes to 0, you're getting liquidated if you go take a margin trade. And it could even go to negative. And the reason we said that was because freaking Canadian oil, that morning, before US oil did this, Canadian oil did go to negative. It was trading at negative 18 cents, and the daily range was between negative 18 and $2, right? So we had an example of something going to negative, right? And what do you know? It went to freaking negative eventually, and people who PM me actually PM me back saying, holy freaking crap, thank you. Some people took the trade anyways and they got hurt. But this is what we teach this in Mango Seed. What the first module, I'm like, it will go lower than you think it will. It will go, and all it takes is this one time. Do you guys just try and fathom how many people probably lost their entire accounts, their entire savings, because they thought they were getting a sure bet buying in at around $1, right?
So now question is, now this is something that we've received a lot of, like this question is, why did this happen? How the hell did we see negative numbers on US oil? I mean, wars have been fought over this oil. So could you actually explain what happened here?
Okay, so to be able to understand what happened over here, you need to be able to understand what a futures contract really is. And a lot of people don't understand what a futures contract is. And that is in itself very, very dangerous. To trade a futures contract not understanding what it is.
So what is it? Like explain it in like layman terms.
Okay, so I'm gonna simplify this for you guys, all right? And to do this, let's go back in time, okay, to when these futures contracts were really invented. So now futures contract was actually created as a financial instrument, okay, just as a tool for business people to be able to hedge against like uncertainty in their business, right? And when I'm talking about a business person, I'm talking about someone like a farmer, right? A farmer is a businessman, okay? He produces goods. So let's say we are talking about a rice farmer, and this is an example that I used in the seed just this morning too. Let's say you're a rice farmer and you're looking at the current prices of rice and you're like, oh wow, rice is going for a really, really high price.
Yeah.
Okay, I wish I could sell my rice for this high price, but I haven't harvested my rice just yet. Okay, it's going to be a few months till I harvest my rice. but I really, really want to take advantage of these prices. So how does a farmer take advantage of that price, right? How does he sell when the market is high, right? And in an effort to avoid being forced to sell when the market is low. How does he take advantage of that? That's where your futures contract comes into play. He can go on over to the September's futures market, okay? That's your September's contract. And he can future sell. I'm simplifying it for you guys to be able to understand the concept here. He can sell rice that he doesn't have right now. And then he will be contractually obligated to deliver that rice in September. Okay. So now this farmer knows that he is likely going to harvest his rice by August. So in August, he's going to have his rice.
Yeah.
Okay.
Yeah.
Okay. But he'll only have to deliver it in September.
Okay.
Right now, however, we are in April and he gets to take advantage of the prices being high. So he's selling in April and he's delivering in September. That's a futures trade over there. Okay. A futures contract, forward contract. Okay. So he's delivering, or he's set to deliver only in September.
Yeah.
On the flip side, there's a buyer, okay, who's contractually obligated to receive it, to buy it. Okay, he's taking the other side of the contract, so he is agreeing to buy it in September. So that's your futures contract. Essentially, you have your farmer who's contractually obligated to deliver the rice in September, and then you have your buyer who's contractually obligated to receive the rice in September, unless he sells those contracts or rolls it over. But don't worry about that for now, okay? This brings us to oil, okay? And this is where people get very, very confused. The only contracts that actually crashed and collapsed in oil are the May contracts, okay, that essentially expire towards the end of April. Why? End of April, because they are set to be delivered in May. And it's not easy to deliver oil, barrels and barrels of oil, right? So you need that delay. So when you are basically trading the May contracts, okay, oil futures, and you are a buyer, and if those contracts expire, you are essentially going to have to take delivery of those oil barrels, unless you can get rid of those contracts or essentially sell them, okay? Now here's the thing. Because of coronavirus, all right, because of essentially a lot of supply and no demand, all the oil storage is packed. There's no more storage left for oil. Nobody can store this oil anywhere, even if they buy it. And now the cost of storage is more than the cost of oil. So people did not want to hold on to any of those contracts. They were dumping them. They're dumping them to the point where it got literally down to 0 and 1, right? Because they would be paying more to just store those barrels. And most of these people who were caught in the situation, these were financial speculators, okay, like you and I, okay, they weren't actual people who wanted to hold oil to begin with. They were just speculating, and now they're in the situation where like, oh no, we'll have to take delivery of these oil barrels. So they wanted to get rid of it, and at that point, you're willing to get rid of it at any price, okay, even if it's freaking zero, because you're going to end up paying to store it. Now, there are other speculators thinking, oh my God, it's at freaking $1. It's at a few cents. Okay, I'm gonna take this. This is a deal of a lifetime. But hey, no, it doesn't work that way, because then they realize, oh no, there's no buyers at all. It's going lower, and then the realization dawns on them that they will have to pay for storage. So they are like, you know what? My storage cost is going to be like, let's say $5,000. All right, I am willing to get rid of my 5,000 oil contracts. Okay. For a loss, because it's going to be less than the cost of my storage. So now it's not the cost of oil that matters, it's the cost of storage that matters. So people were just trying to get rid of their oil just to avoid having to pay for storage. So they're like, listen, take my oil, I will pay you money. That's what is essentially happening. Negative oil, because people are like, take my oil, I will pay you money. It's kind of like the garbage man. You pay the garbage man, right, to come to your door and collect your garbage, right? That's what oil became. It became garbage. People were paying people to come and take oil from them because they didn't want to keep it, just like garbage. Right?
But this is all actually very interesting, considering just, I believe it was last week that there was some bullish news about OPEC and supply.
Oh, yes.
So they had reduced supply, and a lot of people were looking at that as a bullish sort of news that it was bullish news that came out.
So
Okay,
I think it was 10 million barrels.
Yeah. So, I mean, you think that, with that news, price would, actually have some sort of recovery, because it already did drop quite significantly when that news came out. And that's why, they tried to, get together, find a solution. But even after that, we had this. So now I think explain the whole thing of usually when there's less supply.
So the premise is that the reason people got really bullish on oil after that announcement, and we saw a rally which was pretty much bait in my opinion, it rallied into your daily 21 EMA, and then that was a good short opportunity, all right? And this is why, guys, I always place technicals over fundamentals, okay? Because it's easier to read technicals and be like, wait a minute, I shouldn't get too excited just yet. People got I have friends, real life friends, who got excited over that, and look at what happened now, right? Anyways, going back to what I was saying, the premise is that, hey, they have reduced supply.
Yeah.
This is simple economics, guys. Supply goes down, that means price has to go up, right? No, there's another side of the equation that is more important. Demand. You can reduce supply as much as you want, right? If there's no demand, price is not going to go up. Period, right? So from the experts that I follow, they seem to think that 10 million barrels was not enough of a supply cut. And they were surprised that the general public was getting very, very excited over that. And one of the things I've learned from my mentor is that fundamentals are always delayed, but the charts do catch up to fundamentals. And if the supply cut was not enough and demand was not there at all, and we know demand is not there, right? Is it too hard to figure out considering the whole world is in lockdown, right? So it doesn't matter that you cut supply. If there's no demand, it's not going to make the price go up. And this actually leads us very, very nicely to I got more than a few questions on the halving.
Oh, yes.
This has been my gripe with the halving for a while, okay? And you guys know I'm bullish on Bitcoin. You guys know I'm long-term very, very bullish on Bitcoin. But every freaking one, Sean, Bitcoin has to go to 20,000 this year because of the halving, okay? Yes, the halving will have an effect, okay? Will have an effect eventually. Everybody is using the same freaking idea or mindset that they use on oil that they're using on halving, and they're not realizing it. And what's the argument? Hey, halving, right? So supply is going to go down, so price has to automatically go up. No, it doesn't work that way. There needs to be demand as well. In fact, demand is more important. You could have no halvings. And price could still go up to freaking 200,000, 250,000 if there's demand. And on the flip side, we could halve down to freaking zero today, and price could still go down because there's no demand. Halving is not going to change price if there's no demand.
Yeah.
Now, the combination of reduced supply and increased demand will change price. But if you have reduced supply and no demand, it's not enough to change the price towards the upside, okay? And if you don't believe me, just look at what happened to oil. You had your reduced supply, but you didn't have your demand anymore, right? And price kept going down and down and down until the freaking cost of storage was actually more expensive than oil, right? And then demand reduced even more, right? And that's how you get your trending moves, guys. And that's how you get prices going lower than you ever could believe. And people are always in disbelief.
So do you see now, talking about supply and demand now, I mean, that's a very interesting insight, right? I mean, this is what happened to oil despite supply going down, right? Demand has dried up because, well, economies have come to a halt. Supply chains are broken. No one is using oil. But for Bitcoin now, with the new halving coming up, right? That happens, by the way, in 20 days from now, okay? Less than a month before the halving. So we have the halving coming up in 20 days, which decreases the supply of Bitcoin, correct? And given the current economic conditions, increasing unemployment, okay, what else? As in, people are not getting paid in some countries. I mean, I have a couple of friends whose employers have asked them to work, but they're not getting paid in regular intervals. So if you're looking at all of these sort of factors, all of these variables, what do you think of the demand of Bitcoin given the current economic situation?
Okay, cool. So now I'm going to have to kind of flip on what I just said, because I'm not really flip, but I want to, it's not as simple as that either. You know, how people try to make it as simple as, hey, it's only about supply. And then on the flip side, you also have people saying, hey, it's only about demand. It's not that simple either. Okay, I do want to emphasize one idea that people don't understand, or one concept that people don't understand, is that one of the biggest pressures on the market are the miners. Okay, I do believe that around $500 million worth of Bitcoin is sold into the market, or rather mined. Let me put it that $500,000 worth of Bitcoin is mined every month by the miners. Now they have that kind of selling power if they do sell all their Bitcoin per month. Now they don't. I'm pretty sure not all of them sell their Bitcoin. A lot of them are hoarding. A lot of them are just keeping it. A lot of them are selling only a portion of it, and many of them are selling all of it, by the way. Okay, many of the miners are selling all of it because they care more about fiat. So miners have the biggest selling pressure on the market right now. Okay, they are the biggest sellers. Okay, the question is now, who were the biggest buyers to keep that balance, right? So that is how we need to be thinking about the supply and demand economic side of Bitcoin, which is why I say that in the long run, the halving will have an impact, because the miners are going to have reduced sell power, right? Because what does the halving do? It basically halves the Bitcoin rewards.
Yeah.
If you guys want to understand Bitcoin mining and Bitcoin rewards, how it works, read the articles I wrote like a year and a half, 2 years ago. I use very simple analogies, very fun analogies for you guys to understand it. It's very, very easy. Don't get intimidated. It is important that you understand these kind of things. You need to understand the market that you are playing in. Okay, so if the miners, you need to understand the miners are hoarding a lot of Bitcoin. Either way, they're going to have Bitcoin. So they're not going to immediately have reduced sell power, right? If they're used to selling a certain amount to keep their operation expenses up, right? They're going to keep selling that until one of two things happen. Either they become more efficient or they are forced out of the market, which is why Bitcoin, by the way, is probably the only free market in the world. All right, we actually have a concept of going bankrupt in Bitcoin.
Yeah.
Over here in the real world now, bankruptcy no longer exists. I heard an amazing phrase a day or so ago, or I forget when, but the guy said, capitalism without bankruptcy is like Christianity without hell. It does not make sense. And it's so freaking
That's a
true.
good one.
Yeah, I'm like, that's genius.
Oh man.
Right?
That is so true though.
That is so true.
true.
Yeah. So when a miner capitulates, it is a miner going bankrupt. Okay? And that is good. That is good because you're weeding out inefficiency, and the efficient miners now get to start taking advantage because they get more share of the rewards, for one. And number two, all these miners who capitulated all of their equipment, they'll have to sell into the market, and perhaps it's going to go to the efficient miners, by the way. And wow, there we go, Bitcoin. So all this cheaper equipment is going to go to the efficient miners. And this is another example of how it takes a while for it to take place in the market, because for them to actually ship the equipment from one country to another is not going to happen fast.
Yeah.
Right? So again, it takes time, guys, which is why you're seeing, right? By the way, guys, Bitcoin halving happens, and 1 year later, we see the pump, right? Because you start seeing the buy pressure get applied on the market with reduced sell pressure over a period of time, right? And you have the squeeze.
Yeah, and I feel like, given the current economic conditions, okay, these are unprecedented times. Playing fractals right now could be disastrous. As in, we have never seen anything like this, in the world.
Just use the concepts that we teach in Seed, guys. Okay, now if you guys aren't in Seed, use the concepts we teach here. But if you guys just backtest everything I taught you guys will see how stress-free it is and consistent it is, right? And like Joe said and I'm kind of patting myself on the back today, but she said it so beautifully, because that's what I was aiming for with the Seed program. She said these concepts are so deep, but so easy to understand, right? Because I spent a lot of time, just weeding it all together, the way it all builds on each other and intertangles. So guys, take advantage of that. I am following how much you guys are watching, okay, and which one of you guys are rewatching content, and I'm really proud of the some of them who are actually, like, I'm not going to take names here because I don't want to sound like I'm picking favorites.
Yeah, many people in the seed program have come very, very far. So, you know, kudos to you guys. There we
go.
But
Bitcoin,
May 20th, I want to mark this right here. So this is May 20th.
Do not mark it on my chart. I don't care. I don't want to know. There's a reason I didn't mark it.
I was just like, okay, how far out are we from the halving?
See, now you ruined it for me. I was trying
not
to care.
No, I haven't marked anything.
Okay, but now I know it's at the end of the cloud.
But
Jesus,
no.
She ruins movies for me too. You know, I don't want spoilers. She's like, but I didn't tell you anything. Well, you don't need to tell me anything. You need to just kind of have an expression on your face or ask a certain question, and you've ruined the movie for me because I know now. I just know.
I try and pretend like, you know, I just didn't divulge anything. I'm like, I don't know. I just think. But okay, no, but it's cool right now. So I feel like there are a lot of factors, a lot of variables to consider when playing any chart right now. But if there's one clear picture that I think is being, you know, painted for a lot of assets that are traded on these exchanges, it's technical analysis, man. I think the technical analysis will be your best guide, basic foundations of TA. Okay, so for those of you who have that pat down, that is the gold right there. But no, if you are looking for a more in-depth analysis on Bitcoin, I mean, you have our thoughts right now. This is Bitcoin on the daily. This is looking
Watch yesterday's video.
Yeah, just watch yesterday's video. I'll link that above, okay, as well as in the description below. And that will give you, I mean, not much has changed since then.
What we talked about, we said that the 3 scenarios, one of the 3 scenarios was if we do not hold 6,900 and we close a daily, I specifically said a daily underneath 6,900. What do?
We closed at 6,841.
And what have we been doing all day? Using 6,900 as resistance. So if we close it back above, okay, cool. Now we know what the next trade is, right? It's always if this, then that. This doesn't need to go our way. But because we have a thesis, we can manage it. A thesis could get invalidated. When does it get invalidated? Close about 6,900. Period. Done.
Keep it simple, stupid, guys.
Keep it stress-free.
Keep it stress-free. And
do it the mango way. And do not buy falling knives. Even if you think, man, it's only $1. It could go to negative $35 after that. And yeah, you don't want that happening to you. Okay?
But yeah, guys, with this, you have all the information. Trade safely. Trade stress-free.
Gold is dumping too now. Nice.
Oh my God.
Let's look at the gold weekly chart before we end this out. I did not get my trade in gold, by the way, guys. So now I should have, okay, maybe I do have an opportunity. But yeah, this is not looking good. So yeah, that's pretty much it, guys. This could come down to the weekly Tenkin. Do the mango way. Do the stress-free way. We'll see you guys in tomorrow's video.
Ciao, guys.